Good afternoon, everybody. My name is Miles Clark. I'm joined here by good friend and colleague Trevor Plesko. Our first one together, my man.
I know it's been old.
I know seeing you, well, it hasn't been a while. It's been since
First
ever.
time,
Yeah.
yeah, first time.
So just background, Trevor and I went to the same university a couple
Hmm.
years ago, Christopher Newport out in Newport News. Shout out Newport News, Virginia. I'm sure many of you probably don't know about Newport News, but it's fun. That's,
Lovely place. Love
yep.
Christopher Newport. Had some overlap there and
Yes,
some
sir.
fun times as well there.
Cool. Well, lots of market action, lots of updates that we can kind of go over for today's podcast. We didn't really talking before. We've got a couple things to talk about. Nothing really strings everything together. It's been a pretty productive week, I guess I would say, across the board, right? You've got the performance table pulled up. It's been a pretty productive.
Yeah, broadly speaking, yeah, most indices did see some upside action. Not necessarily everywhere, but I don't know. Did you want to start off with some sector action this past week?
Yeah,
I
sure.
know we saw
Actually, before the sector stuff, it's been pretty strong for small caps. It's been pretty strong for domestic equities in general. International equities struggled a little bit, but we have seen some broad improvement for international equities so far this year. A lot of the kind of catalyst for upside movement this week, at least, has been on the tariff front. I know we're recording this on Thursday. What is the date today?
the eighth.
Thursday the 8th. You are listening at least on Friday the 9th. As of intraday action today, we have got some progress on tariff deals with the United
UK
Kingdom.
today.
Exactly. So we've seen some back off. Markets are appreciating at least some progress on the trade front. That should be possibly as we move forward through May, we get more of that, knock on wood, right? Not the other way around. But that should be a catalyst for markets as we go forward. Sector stuff. Don't want to don't want to cut
Yeah.
you off. Go ahead.
Yeah, and will say some of those developments I think have already led to some chart action among some of those notable international funds. If you look at that all cap world XUS ACWX did get a break of that triple top there at $58 recently, and it's kind of interesting. I mean, you've seen developed equities or developed international equities be a little stronger relative to emerging markets, but both kind of emerging and developed have seen kind of general upside. You saw EEM also return to a positive trend over the last week and break a quadruple top actually on its chart there at 45.50. And then if you look at some developed international representatives, I guess EFA also had a break of a double top there and is just off of all-time highs from 2007.
Wow, that's what is that, 15, 16 years? I think we're getting old. But point being, I mean, we've seen a lot of international improvement here.
Mhm.
Now, you mentioned emerging markets have kind of lagged. I would imagine, I'm no professional here, but I would imagine that that's probably related to China and the continuing trade tensions there. So we've seen
Mhm.
a little bit more in the way of improvement from developed markets. Those guys, especially Europe particularly, has shown some resilient relative strength movement over the course of 2025. We start to see progress from China on the trade front. That could lead to subsequent price action, which would be a big deal for
Yeah, that
for
could be a big
Treasury.
catalyst for emerging markets going forward. But
We've
we will see.
also, before we move on from the international front, just very briefly, we also went through our seasonal evaluation for our models.
Mhm.
And so, these are all tactical models here, which are going to rotate and pinpoint areas of relative strength. We've got models that align with the seasonally strong and seasonally weak periods of the year. So we've got an evaluation period in February, May, just a few days ago, August, and November. For those of you who are listening and maybe aren't as familiar with the model evaluation period, we just evaluated. We did see a couple of rotation, a couple of our models rotate
Definitely some
towards
shakeout, yeah.
international equities. So yeah, I mean those that we are seeing some preference that is moving towards international equities, but here's the but, we still do have those models focusing in on domestic equities. So it's not like domestic equities is completely weakening or completely out the models, right? There are still areas that are doing pretty well. And talking about that, what's kind of led the way over the course of the last week, at least since we
Yeah, in
last
terms of the
chatted?
last week, you've seen some upside from some of those more risk-on areas. Among the major 11 sectors, you saw technology with a pretty notable increase over the last week. If you look at XLK, that Spider Sector Fund representative, that was the best performing of those 11 funds, and that was up about 2.8%.
Is that including today?
That's not including today's intraday actions. So that's going to be from the end of the 30th to the 7th.
So probably even more with the with today's
With
action.
today's action, yeah, I imagine that'll be even more. But it is interesting. You've actually seen some relative strength developments with that action this past week. We have our kind of long-term relative strength sector rankings within Dolly. And this past week, we did see the sector overtake consumer staples
Hmm.
to move back into that sixth spot, I believe. So a little bit of a more risk-on move with recent action this
Yeah, and
week.
that's actually a good point. I mean, technology, just for background, what we do for within our Dolly rankings, for those unfamiliar, we take representatives for each one of these sectors. We can do this for anything. So we do this for the broad rankings, we do it for international equities. But for the sake of our conversation, we're just focusing in on those sectors. Technology over the course of 2023 and 2024, as many of you listeners probably expect, technology really led the way over the course of both of those years. In 2025 so far, we've seen it back off, right?
Mhm.
Started to kind of fall out of that top spot, ultimately fall out of an overweight status, maybe towards February or March or so, and then ultimately fell down as far as, what'd you say, seventh?
Seventh, yeah. And so that's where it was up until this past week. But given some of the recent rebounds of the markets over the last couple of weeks, I think it finally moved back up ahead of consumer staples.
Hmm. And
It,
that's an interesting one too. That's why I
Mhm.
keep cutting you off, but that's an interesting one because you look at Staples and that's more of a risk off name. But not only has technology moved up a little bit, but it's moved up above a risk off sector representative, right? So kind of interesting.
Yeah, I mean, consumer staples is also one of the worst performing sectors over the past week.
Hmm.
Actually down about 43 basis points, at least using the XLP representative. And I mean, looking at XLP, I mean, one thing we do with some of those relative strength matchups is see how is one sector doing versus another. And among the most notable relationships is that consumer discretionary versus consumer staples relationship
Hmm.
of are we in more of a discretionary environment that we would say is maybe a little more risk on, and we do that by putting the two on a 3.25% relative strength chart. Don't necessarily need to get into the details, but
Right.
we did see a kind of reversal among that chart where XLY did reverse back up into a column of X's over, I think, the last 2 weeks on the end of April versus XLP. So another kind of risk on signal among those different sectors with the market rebounding over the last couple of weeks.
Yeah, no, that's a really good point and one that, I could certainly ramble on for a little bit. But I mean, it's one of those areas where it's important because you get to look not only at one asset versus the next, but in this case, XLY versus XLP, but that also gives you a tone for how the rest of the market is doing, right? I
Mhm.
mean, is it more dominated by your discretionary names, or is it maybe more, dominated by your staples names, by your soups, your Campbell soups of the world, right? And in this case, we've kind of seen that reversal back up in favor. Now, there's still some work to be done, right? When we look at the major indices, still well off of 2025 highs and those all-time highs
Mhm.
established in February, but we have seen a very swift rally off of those 2025 lows. And it's really, like you've just mentioned, been at the hands of more risk on names. That's going to be a net positive for bulls.
Yeah, especially considering kind of the long-term picture. I mean, even with that downside action at its worst, the long-term kind of matchup still favor discretionary, and kind of similar story for some of those growthier areas where that long-term strength entering 2025 was pretty high. And I mean, even with that pullback here across the past couple of weeks before the recent market rally, did see some damage among those, but I
Mm.
mean that longer term pictures kind of still favor them. But we definitely have seen some kind of separation more recently in the kind of growth areas, at least relative to some of those more value oriented sectors or just names in general.
Yeah, and you were looking to mention, to give you some credit for some great research you put together. You were looking just recently at the score differences between all value groups, or maybe large cap value groups, and large cap growth groups. Why don't you dive in a little bit more into that?
Yeah, so I was taking a look at our asset class group scores, and for that, we look at essentially each fund in a different category. Specifically, I was looking at large cap value and large cap growth. all the different funds that are tagged as those, kind of what was their average score. And I mean, entering February, at the end of February, we saw those two groups kind of narrowing that score where they were in pretty close territory. And we even saw large cap value overtake large cap growth really for the first time in quite a while, at least for a sustained period. And that kind of saw some recent reversal given the market's rebound. I mean, at its lowest, you saw, um, believe the group have a pretty low score around the mid 255.
Which group? Sorry.
That was the large cap growth,
Growth.
and
Okay.
now back
Yeah.
to about 3.46 territory, and that's about a quarter of a point lead versus the U.S. large cap value, which holds a score of 3.21, at least as of yesterday.
Mhm.
And so, I mean, that's the widest gap between the two groups since earlier in February, where you saw that start of the downside action. So, I mean, things were pretty tight there between value and growth among those different groups for a couple of months. I mean, usually, I mean, that was kind of during those more tumultuous times.
Right.
But with that recent market rally, you've seen some separation kind of back to where levels not necessarily were entering the year, but at least some separation in favor of growth. And if you look at kind of more specific S&P 500 representatives, specifically, I took a look at IVW, which is that iShares S&P 500 Growth ETF. Compare that to the iShares S&P 500 Value ETF. The ticker symbol on that is IVE. Broadly speaking, both kind of funds and groups have seen improvements. But given that longer term strength for IVW, you see our kind of fund scores really favor those growth areas where IVW is a fund score of 4.65, IVE, that's 2.66. So it's a pretty wide margin between value and growth, at least among those kind of large cap areas.
Yeah.
And a lot of that is due to the strength that we saw growth earn the previous 2 years. I mean, I know one notable relative strength matchups we look at is the VUG versus VTV, which is the
Mhm.
Vanguard Value versus Vanguard Growth. And I mean, on a long-term basis, we still see kind of growth favored on that relative strength chart. And we did see some reversal on that into some short-term favor for value, but that
Right.
kind of long-term picture still, and kind of the weight of the evidence, it's still pointing towards that growth, even with some of the recent downturns. So
Yeah. No,
pretty
I
in both
mean,
directions.
there's a lot there. I think that made the take home the takeaway, geez, from that is, growth off of these bottoms has been accelerating. They've been
Hmm.
driving the market. However, there are still acceptable value
Oh, most
focused
definitely, yeah.
areas, right? I mean, on average, right? I know you mentioned a couple different relative relationships that you looked at, right? And the difference between the two. But on average, the average large cap value fund is still above three, right? They are slightly below the average large cap growth fund, but point being, there is still opportunities within each one of those classes. And so it's a decent opportunity now to go out and it's not just a core driven market right now, right? It's
Yeah,
not just
relative to
growth.
where we've been, this is kind
Yeah,
of the narrowest the difference between the two has been for quite some time, and both groups are still in acceptable territory.
right.
There's just been a little bit of separation recently, but yeah, broadly speaking, definitely not the same show it was the past 2 years.
Yeah. Well, let's see. We have two more things, and then we can wrap up the kind of building on that growth idea and the core of the market idea. We've got a bunch of different stocks that are, seeing some notable developments over the course of the last week. Again, building on that growth idea, Nvidia moving back to a positive trend on its default chart here, with positive action. Of course, semiconductors have lagged quite substantially over the course of the year so far, but positive action for Nvidia. You've got the computer, you've got the chart. What
Yeah,
happened?
so taking a look at that chart, it did move back to a negative trend at the end of March. But with some upside action this past month, did break a triple top there at 116 to return to a positive trend and a buy signal as well. And we have our kind of technical attributes, and it is now back in somewhat favorable territory,
Is it a
holding.
three or a four now?
It's now a 4 for Fiverr.
Okay.
And so really all it's missing is some of that short-term strength versus the market. But we did see a brief period where it fell into kind of that unacceptable territory as a 2 for 5er before kind of moving back to a 3 and then now a 4. So definitely some positive developments for both NVIDIA and the semiconductor space. I mean, within technology, I mean, software has been a little stronger relative to semiconductors, but it's nice to see at least some improvement recently within the group.
Yeah, no, I mean that's important to note. I mean, and this is, of course, everyone's watching NVIDIA, probably your clients, if you're listening along, they watch NVIDIA like, they watch their baby as it's sleeping. Is that important, right? But when you see NVIDIA, of course, it's moving up, it's moving in a positive trend. There's an element of a rising tide lifts all boats. I think that's the saying. And so a strong NVIDIA, which is a major part of a lot of parts of the market, is going to be a strong or kind of a tailwind for other areas of the market as well. One point of that Magnificent Seven, kind of shifting gears slightly and just talking about Google, they, again, other parts of the Magnificent Seven, they were kind of in the news over the course of the last week. They fell about 8% intraday with action Wednesday, the 7th, due to some reports that, AI capabilities might attack some of the resiliency of their search engine business line. And so, again, that's not necessarily a hard number, but it was just more of a report that was, hey, this is something that could possibly jeopardize such a strong element of Google's brand and revenue line.
Yeah, in addition to that, I think there's some news with FTC, I think potentially trying to get them to spin off some of their ad agents, ad business, as well as the ongoing kind of talk of them spinning off Chrome as well. So you've seen kind of several forces kind of putting some downward action on Google, and that's definitely been reflected in some of those technicals where it also reversed to a negative trend here earlier this year in February. And I mean, looking at kind of its more shorter term strength versus both the market and its kind of peer internet group, I mean, that's definitely seen somewhat of a downturn recently where we mentioned those attributes earlier, but currently Google only has 2 out of those 5, which we would say is more of a kind of sell relative to the broader market. So definitely seems those headlines translate into technical weakness. I mean, there is some kind of support nearby for the funds at about 148 as well as 142. So could see a potential bounce here around those points. But kind of broadly speaking, across the long term, has seen some damage recently.
Yeah, it's just, about building that weight of the evidence being kind of ushered lower by that negative trend line up above and a name you want to avoid. Now, I think this is where we can probably wrap up our podcast for today. Maybe a chart to leave you with over the course of the next week or so before we chat again next week. The Russell 2000 small caps, they've been an area of weakness so far this year. Now, it depends on where you look. If you look at small caps over the last month, I mean, dang, they look pretty good. 3 consecutive buy signals on that default chart for RUT, the Russell 2000. With intraday action, probably going to be reversing back up into X's and attacking that negative trend line for the second time over the course of the month. Now, point being, you zoom out a little bit, right? It's all about perspective. You zoom out, still a kind of firm down into the right trend, but looks like they've tried to put in a little bit of a near-term bottom. Small caps, they've been an area for over the course of the last 2 years. We've been begging for participation from that group. We haven't necessarily got sustained participation from small caps. But again, trend break might
It would
be a
definitely be a
catalyst.
positive development. Yeah, it's definitely testing there now. So definitely in a chart to keep an eye on going forward, given kind of the significance of that overall negative trends. Yeah, it would be the first time since 2024 that it would move back to a positive trend if it did so. So definitely something to keep an eye on as we watch small caps going forward.
Yeah, I mean, and that 2000 mark, I don't have my computer in front of me, so I don't know exactly where we're trading, but that 2000 mark, I remember it being pretty significant over the course of the last few years, and I'm pretty sure we're bouncing right up around that point. Am I
Mhm.
right there?
Absolutely. Yeah, we're
Okay.
kind of in that range, and that's kind of acted as a point of previous resistance in the past several years, or as a point of support once it finally got above
Right.
there last year. So,
Somewhat iconic, right? The
mhm.
Russell 2000 can't move below or can't move above the 2000 mark here on its default chart. I think that's a good point to leave. You have any other Closing thoughts for the group today, or anything like that?
I don't think so.
All right. Well, listen, it's been an absolute pleasure as always. We'll be back again next week to touch on any developments from what's been a pretty busy market. Keep an eye on the charts and have a good one.